Good afternoon, everyone. Welcome to the Daily Market Update Show, where I update you guys SPY and QQQ and what's currently happening in the market, as well as what's going forward. And I'll give you guys the bull perspective and as well as the bear perspective of the market. And it'll help you with whatever stock you guys are playing. All right, let's get started. So NVDA is currently still a beast. And now we don't have a lot of levels to look at. We looked at this yesterday and briefly. So right now, what are we looking at for NVIDIA support and resistance? So we are looking at the 6-hour chart. Next level I'm going to be looking at is this pivot point right here. So it would be 366.35. You see this, we have 3 wicks up here where this would be our sell zone. You can see we can't, obviously 400 is going to be our psychological resistance, and we don't have a lot of price action in this area. So we just have to look at the size of this retracement from the A to B move. If we do pull back to 0.382 line, say we come back here, break this prior pivot low, and flush to 0.382, that would still be a 6-hour bull flag, and we can potentially just chop around, form that bull flag, and then boom, retest 400 again. Or if we do pull back, we're 10, then it's still healthy, but it's starting to raise a little bit of a red flag for the bulls. But if we do get over 50%, then the most likely scenario of this move will become a equilibrium, meaning we will tighten up into a chop zone, which is a equilibrium, meaning they'll look something like this if it's equilibrium. So we'll see. The size of this retracement is going to be the most key. So if we do hold 0.382 and bulls, let's say we have 3 wicks down here, bulls play defense over here, just like this when bears play defense up here. You can see all the selling over here, and we get something like that down here, bases out, then that's going to be a potential bull flag to watch for if you're a bull. So obviously NVIDIA has been moving the semiconductor sector, which has been moving the QQQ as well, and QQQ has been holding SPY up. So all of this matters if you are in the market regarding of what stocks you're playing. And so we have to see if NVIDIA give us some weakness in the semi sectors or continue to hold up and help other sectors. All right, let's get into QQQ itself. So QQQ now, we have a strong gap up, obviously due to NVIDIA and the entire semiconductor sector helping it. See SMH is like up 8%, 8.5%, which is insane to see something like that for a semiconductor sector in one day. But so that helped QQQ. But now you can see we have tested the top of the rising wedge. We got out of it. Now we're back into it. As I've mentioned a lot of times, these rising wedges are more just for visual guides. It's not a definite support or resistance. The horizontal ones are more valid because I can just move with these lines, rising wedge lines. If I just adjust a little bit, I'm like, okay, I'm going to adjust a little bit here and just move this up. And we're still in the pattern pretty much. So I'm just going to move it back a little bit. But yeah, so we did test the top of the range, got out of it, came back into it, pretty much closed right on top of it. So I would say this pattern is still valid. And if we just continue to grind up into late June, then this rising wedge would just look something like that. And as of now, we are still in it. So tomorrow maybe we get a pullback into here, retest this prior support zone. We did test it today. You can see we held it. This was 3 days here. We couldn't get over it. And now we came back to it, bounce off of it. So that's a good sign for the bulls for initially. It's because SPY, you remember SPY did the same thing where it held for 2 days, then it rolled over. So we'll see if QQQ can actually hold this level. So far, bulls played defense, and so far so good. Bounce off of it, and it's a good sign. So if we pull back to it tomorrow, bounce off of it again, then that's a very good sign for the bulls. If you're bear, you can say you can try to top fish at this level, but there's zero signs of weakness at the moment. And the only thing that I can think of for bears is we are overbought or overextended. But we don't just play just based on one scenario or one narrative. When bulls have everything in their favor, they have the weekly uptrend in their favor, they have the daily uptrend in their favor, they have the hourly uptrend in their favor. Even on smaller time frames, they have currently, We still have the 5-minute. 5-minute don't matter that much, but this is a 5-minute uptrend. Now it's a 5-minute downtrend after hours, but no big deal. It's just, but hourly, all the important trends are in bull's favor. We had a hourly downtrend here, but just that NVDA move negated the whole thing. Now we're back in an hourly uptrend. So 4-hour, hourly, everything back into a uptrend for the bulls. So yeah, you don't want to short into a bull train into your face. So usually we want to see some weakness before we get into that. Even if we just pull back all the way down here, right? You can get in on the next bounce, right? We said we have a nice big pullback. Now we have room to set a daily lower high, meaning this high is going to be lower than this high. So let's say we bounce back up to here, you short here. Now we have room potential to set a daily downtrend. And you may miss like, let's say you try to get it top today, right? You may miss like what, 0.9%. But now you know that there's a good chance that we can confirm a daily downtrend. If not, you just get stopped out for a small loss here. Versus, you're trying to like catch every pop. You're like, let's say we're just back here. You're like, oh, we are overbought. I'm gonna short right here, right? And you're hoping for a pullback. Next thing you know, we have 2 even bigger days than all of this full grind up, and then you just take a bigger loss until see a weaker. You want to see something weaker in the market before we short. But if you're a bull, just continue to hold your position. Like we have this slow grind up. You can start scaling out, or just ride the hourly uptrend until hourly uptrend is gone. Or you just look at this support level right here, 337. The last couple of days where we tested it, can go over it. Now we have bounce off of it. So if we do break through it, below it, then that's a little bit of initial red flag for the bulls, and that would be a good sign for the bears. So you can potentially just set your stop loss here and let it ride. If it goes higher, it goes higher, and you can take profit up here, or you just set that stop loss. If you breaks below it, you still stop out with a profit. Essentially what I would do if I was a bull in the position. And let's take a look at SPY. So SPY, rising wedge, also in play as well, tail looking line. Yesterday I talked about we got out of it, and potentially we're going to come back and back test it. So we did come back and back test it, and we got back into it, but came out of it. So we are drop, bounce, very normal for a bounce due to how much we have dropped. Now, can the bears reject that tomorrow? Is what I'm going to say, because this is an indecision candle. You can see upper wick, lower wick, we close right in the middle, right? So this is an indecision candle right now. I would say SPY still pretty darn weak. If you look at QQQ, we were up close to 2%, over 2% today, and SPY managed to be green, but due to how weak it is, given that how much QQQ gone up 2.5%, and SPY was not able to follow through that much. So if that's a QQQ was only up 1% today, so I would have been red, right? So that's a big divergence between the two still. So if QQQ decides to consolidate a little bit tomorrow, that would be a red flag, because we just broke above this level. So if we consolidate, potentially bounce, double bottom, test here again, see if we can bounce off or not. But if we do break below here, SPY is definitely coming back to test that 410 level. Yeah, this will still be my guide, this visual guide, rising wedge, and still the same narrative. XLF, XLV, all the sectors in the SPY financial sector was flat to green today, pretty much flat. XLV, red today. As you can see, XRT, retail sector, red today. Yeah, it's still same thing. Dow being weak, SPY being in the middle, QQQ being in the very front. But QQ might be getting a little bit tired. So we'll see. SMH, is pulling the weight today for QQQ. So you can see semiconductor sector is up. Yeah, almost 9% today. So and it's getting close to the all-time high. You can see the only structure left is this structure for SMH to break above that. NVDA as well already broke above this structure, and the rest is doing a little bit of a catch up. But we'll see if SMH can come back, test the low range of the structure. Let's see here. Just do a rough one, see where. Okay, 147 is a potential area that I'll be looking for if SMH does continue. If it does continue, I would like to see a little bit of a pullback before it wants to continue to test this value area low, 147. So it potentially looks something like this, consolidate a little bit, pull back some of this insane move, and cool down a little bit, maybe form a base for the bulls, and then test that 147. Right? We don't know if that's going to happen, but if it's going to happen, we still need a little bit of a consolidation, just like a base, something like this or this, to form some sort of support, or it decides to roll over. Yeah, so we'll see. So we need more price action for that before we can even really determine what's going on. But we are testing top of this range. So that will SMH and QQQ Team Bull ends up joining Team Bear SPY. And SPY sectors XRT, XLF, XLV. Will they flip and join QQQ? So that's the narrative that we have been talking about lately, and still going on today. Even though the market's seen on cloud 9 today in the semi sector, we'll have to see a little bit of underneath. Amazon was red, but Google, Microsoft obviously is green due to its exposure to AI. So being more of a sympathy play to NVIDIA. And rate hikes are now priced in for June 14th. So our next meeting has a hike. The reason I think how fast this probably went up in the last couple of days that we've been talking about it is because of NVIDIA. NVIDIA just made the entire sectors, everything feels like recession is canceled, and there's a strong demand for the outlook in the future, making the Fed less cautious to wanting to pause, because the reason they were pausing is because they don't want to break something. They want to break the bank, they want to break the economy, and causing a huge recession. But based on the demands of future outlook from NVIDIA and all this AI hype, and even though NVIDIA actually made money from the AI already, so it's not might be hype for other companies, but for NVIDIA, it's a real profit. So Fed might just be like, you know what, we're just going to do another hike and then go from there. Right? So that's essentially what is now being priced in. 52% chance of a rate hike now in June 14th, and then it's a hold. In November, potentially there's a cut. So we'll see about that. Yeah, so that's let's see what it's now. I just refreshed and okay, it's back to 50-50. It changes around all the time, like by 1% or 2% fluctuates. But if this keeps going, I'm gonna say we're probably gonna get a rate hike in June, based on how strong the market is and demands of the future outlook of all these demands. So we'll see. So I got for you guys. Feel free to subscribe if you made it this far, and comment below if you got any questions. And what currently, you can comment below as well if you guys are shorting the market or you guys are bullish in the market. Let me know in the comments. I would like to know. And yeah, and I will see you guys tomorrow for the daily update. And make sure Monday is a holiday, so make sure to close your positions or keep it open if you want to. But it's gonna be a 3-day weekend, and the debt ceiling drama is still going on. So it's getting close to June 1st, which is next Thursday. So be a little bit prepared for that, just in case it. The we don't need a debt default to have a drop in the market. In 2011, it was a credit rating decrease from one of the agencies. So if that happens, then we get a drop in the market. So technically, we don't need a default for market to drop. So it just, as we get closer and closer to the default date, those scenarios of things, credit rating getting dropped and all that kind of things start to increase a lot more. And that's where the fear comes in from the market. And potentially we get a quick, fast drop. If that happens, get some money out, buy the dip, or on your favorite companies or companies with a strong balance sheet like Microsoft, all these decent companies. If we get a big drop, but as of that, we don't know what's going to happen. So we'll have to see what happens next week and be prepared for it. And just in case. So the chance of default is like slim to none. But the thing I'm talking about where they decrease the ratings and everything, credits, that could potentially happen as we get closer to June 1st. Just to let you guys know. And I will see you guys tomorrow for the market update on Friday, and I will do a natural gas weekly update on Saturday, and I will do a big tech update on all the big tech stocks: Tesla, NVDA, Amazon, Apple, Google, and Microsoft on Sunday, and update you guys whatever happens on over the weekend. And I will see you guys tomorrow. Have a great rest of your day.